in your portfolio, large cap funds would surely provide a good stability and less volatility. But for better returns, you always need a mid-cap fund in your portfolio. So in today's video, we'll discuss about one of the most popular mid-cap fund, that is Axis Mid-Cap Fund, and check its performance using real data. And by end of the video, we shall be able to decide whether to continue our investment in this fund or should exit this fund now. And if we decide to exit, then which fund to go with. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Axis Mid-Cap Fund has been one of the star performers in its category, that is the mid-cap category. Here we will be taking into consideration the data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 16,500 crores, which is okay for a mid-cap fund, while the expense ratio is 0.47%, that is less than 0.5% and quite low as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is BSE Midcap 150. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is heavily invested in finance and technology. These sectors are the core sectors and quite a good performing mid-sized companies form a part of this sector, and when compared to its benchmark, its allocation in technology sector is on a higher side as compared to its benchmark. This can sometimes lead to performance issue when the technology sector does not perform well. As evident, Cholamandalam Finance, ICICI Bank and Bajaj Finance are the main stocks of the financial sector, whereas Coforge and Mphasis are the major contributors in the technology sector. Here also the stock selection looks good. On checking the portfolio allocation, it is evident that the mid-cap shares form around 65% of the portfolio, whereas large cap shares form around 35% of the portfolio, and only negligible 1.21% is allocated to small cap. With the above allocation, the fund is able to provide a very good downside protection during bad phase and also be able to generate a good return with less risk. The portfolio allocation is quite good and very suitable for long to medium term investors. Mr. Shreyas Devalkar sir has been managing the fund since 2016 and that too very efficiently, and hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the fund performs on risk parameters. Here, we compare the parameters with the benchmark index and the category average. So the first parameter, that is mean return, that is the average return in a year, is 24.16, which is more than category average but little less than the benchmark. Here, higher the value is better. The second one is standard deviation, that is a tool to measure how much the return has deviated away from the mean, which is in this case is 18.74 and is also less than both the benchmark and the index category. Here, lower the value is better. The third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.10, which is more than both the benchmark index and the category average. Here, higher the value is better. The fourth one, beta, that is the volatility of the scheme as compared to the benchmark, which is 0.71, which is less than the category average. Here, lower the value is better. The fifth one, that is alpha, a tool that measures how much better the fund has performed compared to the category. Here, which is 5.52 and is far more than the category average. Here, on almost all risk parameters, Axis Midcap Fund performs better than the benchmark index and category average, which is a very positive sign for a fund. So now let's compare the trailing and rolling returns. Yes, trailing and rolling returns for mutual funds are different, and mostly everyone talks about the trailing returns only. I will make a separate video on this topic as this is quite long and needs to be discussed in detail. But one thing is sure, that the rolling returns will give better idea of the fund performance than the trailing returns. Here we consider both the data for analysis. So on comparing the trailing returns for last 1 year, 6 months and 3 months, here in the period Axis Midcap Fund has not been able to beat its benchmark index. But if you consider 3 years, 5 years or 7-year returns, it easily beats the benchmark and category with a good margin. So in recent times the fund has not performed well, but in long run its return is very good. Now let's also check the rolling returns for 3 years and 1 year. Here the performance of 1 year is as comparable to benchmark index, whereas the 3-year rolling returns is better than the benchmark and has been able to beat the benchmark more than 70 and 60% respectively during the returns period, which is quite positive and a good for a fund. So now coming to the issue why this fund is underperforming since last 1 year. The main reason I feel is that the fund is having more than 35% large cap stocks in its portfolio, which are dragging down the performance. So the question is, what should investors do now? In my opinion, last 1 year performance should not be only yardstick for deciding the future of such a good performing fund, and one should wait for at least 2 to 3 quarters, that is 6 to 9 months, and see what fund manager Mr. Dhaval sir takes steps to improve the performance, and after that only take any decision. I would like to add that I have Axis Midcap Fund in my portfolio and going to hold till my next review. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now, and also press the like button. Thank you.